Welcome back, dear beginner or dear trader, whoever is watching this. I am sure you've watched the Why Trade Forex video, and if you have any questions, if you have any suggestions, please go to the link in my bio. There is a question and suggestion box link there, so you can type in your questions and your suggestions on what video you think I should make, or what questions you have with regards to trading, and I'm going to be sure to answer those questions. Now, the next video we're going to be talking about is what is Forex. So in this video, I'm going to be talking about what Forex is about in depth. It's not just what is Forex or foreign exchange, but in depth reason or the in depth what about Forex. Enjoy. Alright, welcome to the second class. That's the basic 2 of this training. My name is Kimberly Okon. Previously we talked about why trade Forex, your reasons and the reality of being a trader, what it means to have the right mindset and have the right skill set. If you have not watched that video, go back and watch it. Rewind, pause, play, and put down some things, write down, take your notes down so that you can have the memory in your head. Now we're moving on to basic 2, which is the history of Forex, what's traded in Forex, and so on and so forth. So let's jump right into it. Forex really started with the bartering system. As you can see in this picture here, an exchange is happening, so it means that in those days people would give one thing to take another thing. Here we can see somebody giving tomato to take what looks like grains. I don't know what that is. Maybe it looks like beans or something, but you are basically giving one thing to get another thing. Like we said, exchange has been happening since the beginning of time. Alright, now we no longer do bartering system, okay? We don't do trade by barter. What we do is, the present day Forex is we trading the floating exchange rates, right? And the floating exchange rate is based off of the economy of the country. Alright, it means that in the morning or today, dollar can be rising at a certain amount and trading in favor of that dollar would make us profitable, and trading against the dollar may not make us profitable, because on that day, especially because we are trading with other currencies, if the dollar is stronger than the pound for that day, then you would want to trade in favor of the dollar as opposed to the pound. Okay, the floating exchange rate is based on the supply and demand of a particular currency. Supply and demand, aka the buying rate and the selling rate of a particular currency. Okay, so if there's a high supply, the value of the currency drops. If there's a high demand, the value of the currency increases. So supply, sell, demand, buy. Alright, now moving on to what is Forex. Forex is short for foreign exchange. As most of us know by now, it's just foreign exchange, okay? And it happens everywhere. This question here is saying, did you know you have already participated in the Forex market? Once you exchange one currency for another, that's participation in the Forex market. However, like I said before in the previous video, it is that exchange was what used to happen, what happens over the counter, with your Forex bureaus, your banks, your local black market exchange people. Alright, that's what trading in Forex markets is now. You are doing it digitally. Okay, so what is traded in the Forex market, and what is the Forex market worth? Some people don't understand how big this market is. Some people don't understand how massive the Forex, it is the biggest financial market in the entire world. Okay, and as big as it is, it is the most liquid financial market in the world. By liquid, I mean it's money moves by the second. Money is moving in the market, in and out. That's where a lot of people play, right? And people are wondering, why is it the biggest? You will get to that when we talk about who trades in this market. Okay, we'll get to that when we talk about who trades in this market. So the forex market is the largest, like I said, financial market in the world, with a daily trading, that is daily trading, not weekly or monthly or yearly, a daily trading volume of 6.6 trillion. This data was gotten around around March of this year. I'm sure that by now we will have around March of 2021. So by now this amount must have gone up, because in 2019 it was $5.3 trillion. 2020 it went up to $6 trillion, and at 2021 March it was $6.6 trillion. So the trading volume of the market keeps increasing, the awareness of the foreign exchange market keeps increasing, and the people who are involved in trading keep increasing, and more people are getting interested in trading and becoming traders. Okay, so now how do you make profits from this foreign exchange market? It's simple. The word itself is trading, right? And when we were in our secondary, primary schools, the thing that what they told us about the market is a place where people buy and sell goods and services, right? Now in the foreign exchange market, people buy and sell currencies. All right, so the profitability in the buying and selling is when you buy at the right time and you sell at the right time. So whether you are buying or you are selling, you are making profits. It only depends on the points where you are buying from. So if you expect something to go high, you buy and hold. When you expect something to when you expect a value of something or a currency to go up, you buy it and you hold it. When you expect the value of that currency to go down, you sell it. All right, that's why it's written here, you buy low. Okay, so this is a market that has bought. This is what a buy looks like. Okay, and this is what a sell looks like. So if you are buying here, this is a market that has bought. Buying at this point in time, buying in this area, the area where the green candles signify buying, bullish or buying movements, and the red candles signify selling movements. Note, you can make money whether the market is buying or selling. All you have to know is where the market is going. Okay, so if you are buying and you buy at this point, at the high point, you will not make money, because the market will begin to sell and it will go against you. And if you are selling and you sell at a low point, you will most likely not make money, because the market has already sold and will most likely move in a buy direction, and you won't make money. But if you buy when the buy movement starts at this low, and you ride it all up to this point, you will be profitable. The same is true for the sell. If you sell from above here and it rallies down, you will be profitable. So in this market, profitability means that you are buying high and you are selling, you are buying low and you are selling high. Okay, now let's move on to who participates in this foreign exchange market. Okay, like I said, it's the biggest financial market in the world, and of course it means that people who have a lot of money are pumping money into this market. Question is, who is in this market with you, and where in this chain of things, or in the hierarchy of the market, do we find ourselves? Okay, there are 6 major market participants in this industry. 6. The first participants are the government. Okay, the governments are the market movers. Okay, they set economic goals and shape the market with political decisions. The governments are the ones who determine what the central banks trade and how the central banks trade. Okay, they control the central banks. Basically, the government of a country obviously has the power to control the central banks, a regulated power to control the central banks. Now, they are the top players in the markets, all right? The government determines how much money the central bank is going to put in the foreign exchange markets yearly. Now, the central bank here are the second market participants. They are the forex trend setters. They control the money supply in a given economy. So central banks now, because I'll be explaining these things and to help us understand how these participants make their profits and how we make our own profits and who we are, in the market. So the central banks, they are the trendsetters and they control the money supply in the economy. It means that they do not necessarily trade to make profits like we do. The central banks trade to regulate the money supply in the economy, to regulate the economic strength of the country, to regulate the economy. So, for example, I'll use the Japanese or the Asian economy for example. The Japanese economy, Asia is mostly a production-based continent. So the Japanese economy are production-based, just like Japan, China, Korea, and all of that. Most of the things that we even use here, you see a lot of them are made in China. If it's not made in China, made in Korea, made in Japan. Of course, there are other countries that make stuff, and we can see made in USA and all of that. But mostly we see made in. Our made-ins are usually in the from the Asian economies. And the Japanese economy, they mostly ride on selling and exports. Some countries thrive on imports, but the Japanese economy thrive on exports because they make a lot of their stuff, and how they are profitable and how they remain regulated properly is when they sell. So the central banks reduces the value of the currency and enables people to acquire these currencies in order to trade in these currencies and buy their products. Okay, these are the second participants in the market. The third participants in this market are commercial banks. Okay, so commercial banks are your banks basically. Your financial institutions. Your banks basically. We have in Nigeria, we have Guarantee Trust Bank, we have Access Bank, we have Zenith Bank, we have First City Monuments Bank. We have different banks. Okay, and these banks, how they trade is they are private credit organizations that they do the most of the global currency trading through electronic networks. Okay, that might seem like plenty English right now, so let me break it down. They basically trade with monies in their possession, and they trade with monies in their possessions, and most of the people that that trade for them are who we call speculators, people who are specialized in certain currencies and economies, right? So their trading happens online, all right? Their trading happens online, just like us. Their trading happens online, and that's why you see banks that are able to banks that are able to open branches, give out loans and all of that. They have money in their possession, and if you have money in your possession, you put your money in a place, where it will replicate for you. Okay, now the next set of people we'll be talking about, like I said, there are 6 major market participants. They are not all fully listed here clearly, but I'll explain them. Now we have the next set of people are corporations. We call them hedgers. Okay, hedgers are companies that protect their profits by buying and selling currencies. Okay, these are companies that that basically they do it 2 ways. They buy and they sell, and when it's going in a certain direction, they ride on that direction. The market is a bullish market, a buying market. They ride in that direction and they protect their funds. If it's going in a certain direction, they sell and they protect their funds. So that's mostly how corporations manage their money. It's just a a combination of active hedgers that seek to protect their profits through buying and selling of currencies. Okay. Then investment funds. These are highly skilled investors who have a broader selection of investment opportunities, right? We hear forex investments here and there. So these are people who put together monies, and put in a lot of capital and putting into this foreign exchange market in order for them to increase their profitability. Now we have the regular traders. I'll call them the retail traders. Okay, these are risk-taking individuals who come to the forex market to earn money fast. Now, where do you and I fall into this in this category? We are the traders. We are the risk-taking individuals who come to the foreign exchange market to earn money fast, right? Because we don't really have to bring all of the capital in. We bring our capital, and then it gives us an opportunity to trade and make a lot of money that we did not necessarily bring into the market. The traders make up the retail traders make up about 20% of the entire market cap. So all these other people participate in the market, and all these other participants in the market are the real movers and the real shakers of the market. Hope that was clear. If it wasn't, you can always rewind. Make sure that you put down your questions as you are listening, so that when we have our live sessions, the questions can be, and you can ask them and they can be answered.